Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. We are live here today. We're going to talk to you about financial issues from a biblical worldview. That's what we do here at Financial Issues. We defund darkness with biblically responsible investing, and we help you to, or encourage you to, fund the light, to be a joyful, generous, and obedient giver. Our phone lines are open this morning, so if you want to go ahead and get your call queued up, 610-363-1110. That is if you're listening to the live version of the show. You can get in and ask us questions that you may have about financial issues. By the way, guys, I don't have the return feed on my screen. All right, so on today's show, there we go. We are going to get to the most important economic data that came out this week. It was Jobs Week. We're also going to share with you some caution against pursuing ill-gotten gain in our stewardship verse of the day. And of course, we are going to get to your calls and your questions as priority. 610-363-1110 is the phone number. Also, if you're watching from the website, financialissues.org, you can join in the lively chat that's happening there and post your questions. You can also do that on social media. If you're watching on Facebook, YouTube, or Rumble, you can put your questions in there. We have some good folks monitoring that, and that can get us those questions. Well, at Financial Issues, we try to help you stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets and help you understand how those things impact your own personal financial issues. So I've got quite a few takeaways from the news that's happened this week, mostly as it relates to jobs. So the first week of every month is typically the jobs report. So we get the ADP job report, we get the JOLTS report, and then we get the big report that comes out on Friday, just as it did this morning, the non-farm payroll reports. So first off, ADP reported. Now, ADP is a company that does payroll for a lot of companies in the private sector, and they give a report of real-time data that they see from the companies that they process payrolls for. They reported that in the private sector, fewer jobs were added than were expected. So companies added a seasonally adjusted 122,000 jobs for the month. That was down from 146,000 jobs that were added in November in the private sector. And it was less than what the experts predicted at 136,000 jobs. Now, almost all of the jobs, no surprise to us here at Financial Issues, came from big companies with more than 500 workers, which amounted to about 97,000 of those 122,000 jobs that were added. Again, leaving small businesses out in the cold. On wages, ADP reported that the companies that they process payroll for grew at 4.6% from a year ago, and that is the slowest pace in 3.5 years, which is more support that the threat to future inflation will not likely come from wage growth. Rather, wage growth is likely going to come from more inflation. So as companies benefit from higher prices, hopefully they pass that along to their employees, who can then afford to pay the higher prices. Non-farm payrolls, let's get to that. So economists polled by Dow Jones expected to see an increase of 155,000 jobs, and that is less than the 227,000 jobs that we got in November's reading. Additionally, they expected that the unemployment rate was projected to remain the same at 4.2%. So what do we get? Non-farm payrolls in the U.S. that was released just within the last 30 minutes increased by 256,000 jobs, the government statisticians tell us. Wow, that's great. Bidenomics must be working. The employment rate comes down to 4.1%, a tenth of a point lower than what was expected. Economists also forecasted our average hourly wages would have grown by 0.3%, and they were right on the money on that. And they also predicted that wages would have risen 4% from a year ago. So although they were right on the money on the monthly number, they were a tad off on the year-over-year number. Year-over-year wages, the government reports to us, are up 3.9%. Again, sort of easing worries that inflation could be pushed higher by wages. Inflation probably will be pushed higher, but it won't be because of wages. So how much time should we actually spend analyzing the numbers served up by the non-elected bureaucrats who are hired by elected officials whose positions of power are made secure by gaslighting people into denying their own common sense to believe the narrative that Bidenomics has left them better off than they were 4 years ago? Well, not much. It really only matters because of the impact that it makes to the markets who seem to believe much of what the numbers report, at least until they are revised away. And more revisions are coming. So recently, the Philly Fed flagged a new study, or cited a new study that indicates that jobs may have actually fallen in the second quarter of 2024, a much different picture than what we were initially told to believe. So from April through June of this year is the time frame that we're looking at. Government officials told us that the Biden administration created 653,000 jobs from April until June of 2024. And every time that those numbers came out, the markets seemed excited about it, and the Fed talks about the strong economy that we have because, the job market is still really strong according to the government numbers. But this is the same group of government cronies that told us last August that they had way overestimated the number of jobs created from March of 23 to March of 24. They were only off by about 818,000 jobs, so close to 1 million jobs that just sort of disappeared because they overestimated. Or anyway, essentially erasing 115,000 jobs. That revision in August for March of 23 to 24 erased 115,000 imaginary manufacturing jobs, 129,000 retail jobs, 150 jobs in hospitality, meaning restaurants and hotels, and 358,000 professional jobs. Not with a stroke of a pen, but with their magic eraser. Just about the only category that government statisticians got right was about the number of government jobs created, which, by the way, are the only jobs that government actually creates. Obama would have told you that if you own a small business, you're not responsible for creating that business. It was done on the backs of other people. Rather, the government creates jobs, but here in reality, we don't believe that is true. The bottom line is that we could be looking at another massive revision of possibly 700,000 fake jobs that we were told were created that really weren't. Add to that the 818,000 jobs that disappeared from last year, plus whatever gets reported and revised away over the next 6 months. And we might have somewhere in the neighborhood of 2 million jobs that were reported and celebrated that just disappeared into thin air. 2 million jobs that were guesstimated into existence to prove to Americans that Bidenomics works, while we stand in line at the grocery stores scratching our head because the same basket of goods that we bought 3 years ago is now costing us to 50 to 100% more. I have a strong suspicion that all of a sudden, the Biden economist will suddenly have some moments of clarity about the labor markets and start telling us the truth as soon as Trump comes into office. And of course, they will try to blame this bad news on Trump. So keep your eyes open for that. Be aware of that. We've got more to come. I hear the music coming in for a break. I've got a few more stories to tell you about and some of what's on tap for next week. So make sure that you stay tuned with us. We'll be right back here on Financial Issues.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
We believe in being faithful stewards of what God has entrusted to us, and nothing is more important than investing in the next generation. The most impactful way to do this is by sharing the message of Jesus with young people. Crossroads Kids Club is an after-school program that brings the gospel to elementary school children in public schools nationwide. Together, we can make a lasting difference for the kingdom. To learn more and join the movement, visit reachOurschools.com. Again, that's reachOurschools.com.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Welcome back to Financial Issues. We're so glad that you joined here on this, what's usually a Rapid Fire Friday. We're going to try to make that happen. Our phone lines are open. 610-363 is the phone number. We have one person waiting in the call queue already, and we're going to get to him. But I wanted to finish up some of my thoughts. So in other news, other economic news this week, the Fed meeting minutes were released. Of course, we had an interest rate decision several weeks ago, but the minutes are always released a couple of weeks after that. I don't think there was much there that was surprising to anybody else after the Fed gave their press statement and then had the press conference. But according to this summary put out by the Fed, almost all the Fed officials judged that upside risk to inflation. The inflation outlook had increased due to recent stronger than expected readings on inflation and the likely effects of potential changes in trade and immigration policy. Participants also projected that inflation would continue moving towards their 2% target, but acknowledged that the process could take longer than expected. Several members expressed concerns that the disinflationary process might have temporarily stalled or flagged the risk of further delays. I would agree with that. Also, officials noted that the Fed was at or near the point where it would be appropriate to slow the pace of easing monetary policy, easing interest rates. So the Fed had started this cycle with a bang, by the way, of rate cuts with a 50 basis point rate cut, followed that up with another. And now I think the consensus is that they'll sort of stall out. Many participants of the Fed also suggested that a variety of factors underline the need for a careful approach to monetary policy over the coming quarters. Not sure how that's much different than what they should be doing every day, but the Fed also announced another 25 basis point rate cut at the conclusion of their meeting, which happened just a couple weeks ago. And the Fed funds rate in December now sits between a range of 4.25 to 4.5%. And the final point in their summary was that they were signaling just 2 rate cuts in 2025, totaling 50 basis points. So all 3 of the major indices for the market are on track for weekly losses. The S&P 500 is on track for a 0.4% decline, depending on what happens today. The NASDAQ is on track for a 0.7% drop, and the Dow a 0.2% drop. Now, the markets were closed yesterday to remember the life of former President Jimmy Carter, who passed away on December the 29th. And on the jobs news this morning, the market didn't really like the number and is currently indicating a negative opening. So the Dow's indicating an opening, a drop of 0.6%, the S&P 0.75 point drop, and the NASDAQ almost a full point drop. 10-year yields reached 4.73 on Wednesday. That's the highest since April, and they even pushed higher this morning. So what's coming next week? Well, we get inflation data. The CPI and the PPI numbers will come out, as well as retail sales. So we'll be here to help you, to help report those numbers and help you translate that as to what it means for you. So now that you're in the know about the recent and upcoming financial issues of the week, we hope that you will learn more about how we can help you integrate those issues into your own stewardship. We hope that you will find out more about how we can help you defund darkness with our biblically responsible investment strategy. And if you are a partner, if the alert hasn't gone out already, there is a partner conference call, a monthly partner conference call next Thursday. I'm sure an alert will go out toward midweek, but it is Thursday, so mark your calendars for that. Let's get to our stewardship verse of the day. We want to make sure that we get that in. Comes from Proverbs 28:8. One who increases his possessions by usury and extortion gathers it for him who will pity the poor. You know, ultimately, the Lord is the owner and the distributor of all wealth. So if we want to be rich, we can pray to the Lord. One of 2 things will happen. Either the Lord in his infinite wisdom will deem us worthy of the wisdom and understanding and faithfulness that it takes to manage wealth, and he will grant our request, or he will instruct us in his ways to prepare us to be a good steward and receive more things to manage. But be ready. If our motivation is to be rich, and our motivation is not pure, and our will is not submitted to and aligned with the will of God, we won't get the whole package, which is wealth with the peace and security that comes with it. That part that the scripture talks about, no trouble added to it. So if we obtain wealth by any means, as some in the world do, through ungodly means, that wealth will be a curse to us. We will intuitively know that we gain that wealth in dishonest ways and will always be in fear of losing it. So if we have fear of losing wealth, it should be a time for a gut check. We should take that fear before the Lord and try to figure out where we need to repent, because it can be an indication that we could have obtained it in an unjust manner, or if we didn't obtain it in an unjust manner, maybe we have just made it too important. Maybe we have elevated our wealth to the status of idol and trusted in it rather than God. If we've been on the side of injustice and had our wealth taken from us by unjust means, let us rest in the promise of the scripture that the Lord will one day right the wrong done to us. In life on earth, it may only happen when we enter into eternity. But can you imagine the eternal disappointment of the one who spent his entire earthly life in the lap of luxury, but enters into eternity to quickly and sadly learn that their earthly wealth, their God, has no value and no power to save them? So, may we know the peace and provision of the Lord, whether it comes with lots of wealth in this life or not. What do you think, Seth?
Yeah, it's great, Shana. I love what you had to say about it. So this verse speaks about the Old Testament law of God, and under that law, gathering wealth this way, against a fellow Israelite by charging interest, by extortion. Obviously, that was strictly forbidden. But sadly, like many vices throughout history, it was nonetheless widely practiced even among the people of God. And so this verse promises us that in the providence of God, he takes this ill-gotten wealth and will redistribute it to the. That's actually, it kind of goes along with the reminder from, I believe it's Proverbs 13, where we're promised that the wealth of the wicked is stored up for the righteous. Yep. This verse goes along with that. So I do hope that we can honor God by being generous towards our fellow man, Shana, but especially among fellow blood-bought believers in Christ. We shouldn't extort anyone, but especially those who belong to our spiritual family. So
it reminds me of those in government who have the agenda of redistributing wealth.
Yeah. Yeah, right.
Except their intentions are not the same
right.
as the Lord.
And yeah, talk about trying to play God too. It's God's job to redistribute wealth. And so often our government, as sinners tend to do, we try to be God instead of submitting to God. It's a good lesson for us to submit to him.
Absolutely.
Yeah.
All right. Well, we have time before the break. Let's get to Frank. Frank's calling from Virginia. Hi, Frank. You're on Financial Issues. You're live.
Good morning. I'm 82 years old, and I've been a member for 10 years. And
Thanks for being a member, Frank.
What y'all do. I wanted to ask you about the preferreds. Dan always used to say that the preferreds are fairly safe, but you had to worry about the company going broke, but that's about it. And you were saying put your money in preferreds until all of a sudden, like you said, sell them. And I was just wondering what happened. and then also, where do we put our money now for us income guys? Dan, being an old guy, Dan used to always say that you get to a point where the only thing you're interested in is your income. And I guess I got there somewhere along the line because that's what I'm mostly interested in. And I don't know what to do.
Well, I would encourage you to go back and reread the alert. We did issue a sell for some preferreds, but the instruction is to replace them with the preferreds on the list. Now, you don't have to do it, but we went through and we did the math on the old preferreds that are there, the cash flow that they're paying, the current prices that they're at right now. We looked at when they were on the buy list in the past, and what we've determined is, for the most part, if you sell the preferreds that are on the sell alert, in some cases you may be able to capture a capital loss if you're down a little bit in them, even if you just reinvest the money, that the proceeds that you get, and reinvest them in the new preferreds that are on the list, you can improve your cash flow. So we're not negative on preferreds at all. In fact, preferreds are still a good part of our strategy. It's just because of where interest rates have gone and the current environment right now, we found an opportunity to help boost that cash flow that you do deem as important, and potentially help you in a tax in the area of taxes too, if it's in a taxable account.
Okay. All right. I have right much money in the preferreds, and I was had it kind of spread around a little bit, and I'm a little bit concerned about putting how much I can put into the ones that are left.
We've got 5 on the list right now. So
okay.
5 should be plenty. And I mean, this is something that you don't have to do, but what you'll see in the note is that the practice that we have is when we issue a sell alert on something, we drop it from coverage. So it's a do-it-yourself strategy. If you find that there's compelling reason to keep those things, you just need to keep an eye on them because you won't get any further guidance from if it's not on our broad list.
Okay. All right. That's good. Right. I appreciate that. Let me just say one other thing before. I encourage people to call in rather than send in their questions because all too often you don't get enough information to give them a good answer.
That's true. That is very true, Frank.
Right on, Frank.
Great.
And anyway, one other thing. Can you when
hang on, Frank? We're coming up on
Frank,
a break. We're going to have to put you on hold.
Put you on hold.
So that was a great call from Frank. We appreciate that. Well, folks, if you listen on a station that only carries the short version of the show, we wish you a farewell and a good weekend. For the rest of you, hang around because we're going to be back with more financial issues.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. I Googled places to abort. We drive there, and as soon as we get there, I open the door, and the first thing that I see is a bunch of Bible verses in the walls. They gave me a little counseling session, they gave me the pregnancy test again, and they do an ultrasound. And that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We decided with my boyfriend at the time, which is now my husband, to continue the pregnancy together. We started coming to the classes, doing our homework, getting counseling together. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Pharrell came to Crossroads as a fourth grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come home, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachOurSchools.com.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Today is Rapid Fire Friday, and we're going to get right to some Rapid Fire Friday questions. Our phone lines are open. So if you've got a call, Frank just encouraged everyone to call in, because Frank is so right about this, that a lot of times when we get the questions submitted, sometimes we get a whole list of information that that people want to give us to help answer the questions, but more times than not, there's not quite enough information there to really give a good answer. So, we sort of just talk in general and, give you some things to think about, which I think is good, because maybe some people have the same question, but their circumstances a little bit different. But it's always great to have real live people call in. So if you want to be the next caller on this Rapid Fire Friday, 610-363-1110 is the phone number.
That's awesome.
Well,
and Shana, let me just say this too. Folks, don't be nervous about calling in either. I get the privilege of talking to Shana almost every day. She's delightful to talk to. Never mind the fact that several thousand people are listening to the conversation. It's just like having a conversation with a friend,
That's it.
Yeah, it's exactly right. So yeah, please do call in. Frank's exactly right.
Absolutely.
Yeah.
Well, let's get to some of these questions.
Sounds good, Shana. Let's start with Richard. Richard is 69, and he's saying, I have funds in money markets, and I'd like to enter the market. So I've got $200,000 for myself, and about the same in a trust for my brother, who's 66. So $200,000 for Richard, $200,000 for his brother. How would you suggest I get started investing biblically? Should it be allocated to the age model all at once or gradually? What do you think, Shana?
Okay. Well, Richard, I think you need to spend some time thinking about a couple of things, thinking about your goals. So, are your goals the same as your brother? Are you more interested in generating some income? Are you more interested in seeing growth? What is the time horizon that you're going to have to leave this money invested? At what point do you need to draw off of it? That's going to weigh into the decision that you make on which asset allocation model to use. What is your risk tolerance? Also, do you understand well that the markets can go up and go down, and that typically over time the markets have moved up, or there's good opportunity in equity investing, but it also comes with the risk of loss or decrease in value. So if your situation with your brother is exactly the same, if your age is the same, if your time horizon is the same, if everything is the same, then you could use the same model. If not, you may want to use two different models for that. So the first thing that you need to do is settle on which model that you're going to use. And I always suggest that you do it gradually. So, we never know what could happen. I mean, everybody has an opinion about what the outlook for the market and the economy is, but things happen all of a sudden that nobody could have predicted. Consider COVID, for example. That's the most recent black swan event. There are wars that break out. There are geopolitical events. There are all kind of things that happen that can change the trajectory of the markets in a really big way. So I think there's a real psychological challenge that happens when people first start to invest. And I think that the experience that they have in the very beginning of their investment experience really kind of taints or colors their whole outlook on investing altogether. For example, if someone happens to start investing right before, at the height of the market, and their investments decrease greatly or even just a little bit in the very first year, they become very disillusioned and they get a very pessimistic view of investing. They think, well, I heard it worked for all of these other people, but it's just not going to work for me. And then what I find is a lot of times people get out and they never get back in. On the flip side of that, if someone happens to get in when the market is low and in the first year their investments do really, really well, I think they get an overinflated idea of what returns will be going forward and what they could be. So taking a dollar cost averaging approach to building a portfolio is the strategy that we use here. So when you're going from an all cash position, whether it's money that you didn't have before and you're just starting to invest, or perhaps you've retired, you did a rollover, you moved all of the money that was in your company retirement plan into an individual IRA, individual retirement account, and you're starting over. If you're coming from an all cash position, take anywhere from 3 to 12 months to establish your positions. What's going to happen is, if you're placing money a little bit at a time, you're not going to get in at the low, and you're not going to get in at the high. You're going to get in at different places, and so that's going to sort of create a muted response or a muted outcome for performance in the first year. So if the market or the investments that you were going in went straight up, well, maybe you're a little bit disappointed because you didn't capture all of that gain by getting in all at once. But I can tell you, if the situation is the opposite of that, you're going to be happy that you got in little by little, because if the market or the investments that you're going into go straight down for the first 6 months or the first year, well, you're not going to experience all of that downside either. So it also helps you to learn about the things that you're going into, to have some experience watching their behavior to certain market moving news or market moving stimulus.
Awesome, Shana. That's great. Next one up here is Ray. Ray has owned TE84 for about 3 years now. It's currently on the technology broad list. It's about half of what I had purchased it at, he says. Should I hold or sell at this time? I'm 63. I don't plan to use the money for another 4 years or so. What would you have for Ray?
Yep. So, Ray, it's still on the broad list. That means that we review it regularly and we haven't found compelling reasons to issue a sell alert. So it is a hold. As far as adding money into it, on this particular one, I probably would opt for something else that's already on the buy list.
Good stuff, Shana. Thank you for that. Next one up is Harvey. Harvey is in the 55 to 65 model. He owns all of the preferred stocks currently on the buy list, actually, but only about 2% of his portfolio per stock. He says, should I wait for more preferred stocks to be added to the buy list, or can I add more money to my preferred stocks? Adding more money to each preferred to fill out that fixed income preferred sector would put me at about 4.6% for each preferred. Thanks for your help. I'm 71 years old. What do you think, Shana?
Yep. Great, Harvey. Thanks for that question. What I would suggest is that you don't try to fill out your entire fixed income allocation with preferreds. So maybe opt for 12 to 15%. There are currently 5 on our list. There aren't any in our sites right now to be added, but that doesn't mean that something couldn't come up. So we don't have plans to add any more, but if we come across something that looks good, we would add them. So I would work with what's there for now.
Awesome, Shana. Boy, I'd love to squeeze one more in here, but I think we do have the ag report coming up here. And I will say this, Shana, I got to speak with Craig on the phone yesterday. He seems like he's in pretty good spirits. He's still having a little bit of complications from his previous surgery, so definitely keep him in prayer.
Yeah, absolutely.
Yeah.
So we're going to hear from Craig. After Craig, we're going to take a break, and we're going to come back with more Rapid Fire Friday. The phone lines are completely open, so if you call, you'll be the first caller. 610-363-1110. Here comes Craig.
This is Craig Haugaard with your Financial Issues Ag Update for January 10th. Corn traders were focused on South America, where the good to excellent rating for Argentina's corn crop fell 5 points down to 42% good to excellent. Now that remains 12% above the average for this week, but all eyes are remaining on the dryness that has developed and will continue in Argentina for the next 5 days. Until that abates, we may see some upward pressure on this corn market. Yesterday's close had March corn 2 cents higher at $4.56 per bushel. Beans managed to close higher with support coming from soybean oil futures. Much of the support in soybean oil came from news that the Biden administration is going to release a short-term guidance on biofuel tax credits before Trump's inauguration. Beans were also supported by news that Indonesia is discussing curbing the export of palm oil. March beans were 4.5 cents higher for the session at $9.99. Wheat futures closed weaker during yesterday's short trading trading day. Global news was limited and funds were very modest sellers. Minneapolis wheat was a penny and a half lower at 5.86 and a half. Chicago was unchanged at 5.50 and a quarter, and we had Chicago 2 1/4 cents lower at 5.34. Cotton futures just chopped sideways. At the closing bell, we had March futures up 27 points as they ended the session at 68.50. Livestock futures all showed some strength. February live cattle were $4.30 higher at $198 per hundredweight. March feeder cattle were $3.75 stronger, settling at $268, 72.5 cents per hundred. And February lean hog futures rose by $2.67.5 cents, ending the day at $82.15 per hundredweight. Class 3 milk futures just kind of seem stuck at their current price plateau. Yesterday we had the January futures finishing the session 4 points higher as they closed at 20.42. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
It's easy to get caught up in the rush and forget about what really matters. Too often, we invest in stocks without knowing what they stand for. When your investments align with your values, your money speaks for you. Because biblical values matter, even when investing. Learn how to invest biblically and responsibly. Visit financialissues.org to learn more. That's financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support Preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurSchools.com. That's reachOurSchools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Our phone lines are open. We're in the home stretch of the program right now. If you get your call queued up, maybe in the next 30 to 60 seconds, we'll have time to get to you today. 610-363-1110 is the phone number.
And, Shana, some people I know have been asking, too, about where to ask a question. So this is for, obviously, partners. You guys all know the deal. You have the Ask Shana portal. The phone number's open for anybody. But if you're not a partner and you're on our website, if you go to the homepage of the website, on the right-hand side, there's a Contact Us button. If you click that button, that'll take you to a page where there's a space where you can actually ask a question. You put your name in, your information, so that we know, who it's from, obviously. But you can just put your question in there. If you have any kind of question for us, we'd be happy to answer it there. Of course, as Shana said earlier in the show, also we've got social media that you can interact with us there as well.
Absolutely.
So, yep. And then Shana, I saw a real interesting headline here. I'd love to get your take on this. Actually, it's funny. Sam and I were talking about a similar topic earlier this week. We're seeing a lot of big tech overlords apparently kissing the ring of the incoming 47th president. So Google this week donated $1 million to President-elect Donald Trump's inauguration fund. The tech giant also will be live streaming the event on YouTube, of all places, YouTube that has cut us frequently in its past, and will put a direct link on its homepage. Google now joins Amazon, Apple, Meta, and OpenAI in contributing to Trump's fund. Shanna, what do we make of this?
It's going to be a big party, I guess.
Yeah, I think so. Evidently.
A big,
sounds like
expensive
it.
Party.
Yeah, for sure.
Yeah, well, we've seen a lot of things happen in the tech space. I mean, I really have been surprised to see some of these tech giants come out. Bezos, Zuckerberg, all of that. Now, in the last couple of weeks, we've seen Zuckerberg do an about face. They're firing their fact checkers. They're going to community notes, like following Elon Musk's lead. Elon thinks that's pretty cool, he said. So, we're starting to see some changes. And what do we make of this? Well, I mean, there's a lot of things up for grabs. And, at the end of the day, I would say that most of these CEOs are business people, and they're interested in not only the bottom lines of their companies, but their own personal wealth. And so the president of the free world does wield a lot of power and a lot of influence. So, I see that they're sort of sucking up to that. It reminds me of, we're going to start to hear the Supreme Court is going to start to hear the case on banning TikTok coming up. And, what do you think is at stake there? If TikTok goes away, who might benefit? Well, the people that use TikTok might go to YouTube. They might go to Facebook or Instagram or some of those other platforms. So, I think they want to be in a position to be able to benefit if that actually happens. And, or if this whole banning of TikToks forces a sell of the company. Maybe some of these companies wants to be in the good graces in a position to be able to make that purchase. So,
yeah, definitely. Shanna, I'll say this too, for us at the ministry here, kind of excited about this. Maybe this could be the first step in us not having to worry about constantly getting cut from YouTube and Facebook for speaking the truth. Maybe we'll have a little more freedom to be able to speak the truth. So I'm all for that,
I sure hope so. Yeah. I don't worry about it. I mean, it's a bummer if it happens, but it's also sort of a badge of honor.
It is. Oh, it is. Yeah.
If it happens. Yeah, so,
absolutely.
We're committed to speaking the truth based in the Word of God at whatever cost. So, and we have our own platform. We have our own phone app. We have our own website, and we can't be deplatformed from that. So make sure that you have access and you know how to get us on those platforms, because I'm still finding out that people didn't know that Financial Issues is still going strong because they were listening on a platform that we used to be on, and they didn't know that we were still around. So make sure that you have access to those platforms.
Yeah, definitely.
All right, looks like we got a call come in.
Yes.
So let's get to Scott. Scott's calling from Georgia. Hi, Scott. You're live on Financial Issues.
Hey, Shana. Thanks for receiving my call, and Seth, great job this morning on the Bible study. So,
Scott, thank you, brother. So glad you're able to join, man. Yes, sir.
Yep, for sure. So, Shana, was just kind of curious. This is just starting my second year as a partner, so there's a lot I don't know, and still greatly learning. But there's been a lot of questions on preferreds, and so I was, kind of interested in understanding. I was moving towards CD ladders last year, kind of put on the brakes with all the disruption in the market, and looks like now CD ladders is kind of it's not looking like it'll do any good in the future. So the moving to preferreds is kind of the movement. With CDs, there was no emphasis on BRI, so it was just kind of go out, buy a CD, do it inside your investment company. I work with Fidelity exclusively. But with preferreds, there are actually companies in the BRI. I'm kind of asking this question because I was starting to work with my Fidelity advisor around private equity firms that could, deliver high return income returns. And so I'm talking to them. I'm looking at what's on the list and trying to kind of boil down. I'd like to go with the BRI strategy, but I'm just kind of curious as the subtleties with CDs not having any, guidance, but there is in the preferreds. Can you provide any color or clarity around just the FISM strategies there, please?
Yeah. So CDs are considered fixed income. So this kind of boils down to the difference between ownership and loanership types of investments. Whenever you buy a stock, which a preferred stock is still considered to be a stock. So you're taking an ownership position whenever you buy stocks into the company. And when you buy shares of stock, you become entitled to your share of the company's profits, to the dividends if they pay dividends that way. So you are, even though you're becoming an owner of the company, you're delegating the day-to-day decision making to the management of that company. So if the company decides that they want to sponsor a gay pride parade, or if they decide that they want to sponsor Planned Parenthood, or they want to sponsor some kind of legislation that tries to redefine what God says marriage is, well, we don't want to be a part of that. I believe that even though we're delegating the day-to-day decisions, we still have stewardship responsibility over what happens with what we own, or as God sees it, what we're managing. When you buy a CD, basically you're loaning your money to somebody else and you're getting interest off of that money. So, there's the difference between ownership and loanership.
Thank you for the clarity. Appreciate it.
Good. All right. Glad we could help answer that question for you. Thanks for calling, Scott.
Thanks for the call, Scott.
Question.
Yeah, have a blessed weekend, y'all.
Yes, sir.
Thanks.
You too, buddy. All right, Shana. Got time for at least one question here before the end of the show if you want to. Carolyn is 71, and Carolyn says, I have an individual stock account, Roth account at Fidelity. I have cash money to invest in my individual stock account as a result of sales. Can I transfer this money to my Roth to buy more stocks? And what are the ramifications of doing so in regard to taxes? 71 years old, Shana. What do you got for Carolyn?
Okay, good question. So the sales that were done in your plain investment account may or may not have created capital gains based on whether or not you sold them for more than what you paid for them or less. So that's going to happen regardless. Now, the key factor here to even decide if you can move money to your Roth is you have to make sure that you have earned income and you don't have too much of it. So you have to have earned income reported on your tax return to be able to make a contribution to a Roth account. So, if you have at least $8,000, you can contribute $8,000. If you only have $5,000, you could contribute $5,000 still. Now, the other end of that is that you have to check the phase-out ranges for Roth contributions. So there is an upper limit, like whether you're married filing jointly or single, there is an upper limit. If you make more than a certain amount of money, then you're not eligible to contribute to a Roth. So you just have to check those qualifications before you do so. But as long as you're good to go, it doesn't really matter where the money comes from. It doesn't matter if it comes from your bank account or from your investment account. As long as you're eligible to make the Roth contributions, then you could indeed do that. And the other part of that were, what are the implications regarding taxes? So the implications regarding taxes are the future implications. If you leave the money in the taxable account and you invest it, then of course you're going to be paying taxes on interest or dividends that you would make on that money in the year that you make it. And if you sell it, you can be subject to a capital gain. If the money is invested inside the Roth, you experience tax-free growth. So you won't have to pay taxes on the gains or the interest or dividends if you do it there. Well, folks, it was a great Rapid Fire Friday. I hope that you enjoyed it. I hope you learned something. I hope that you were encouraged, and I hope that you will come back next week because, Lord willing, we will be here reminding you that time is getting short. The Master is coming back. There's going to be a test, and we want to help you be found a good and faithful steward of all that the Lord has trusted you to manage. I'm your host, Shana Burt. Come back next week for more financial issues. Check us out in the meantime at financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.